Paul, I don't know whether we start talking about a trade war where we still talk about tensions at 50 billion, then we hear about a possible 100 billion. We also know that the U.S. Treasury is kind of, going the same process, but for cars. So where does this end?
So I think, like any good economist, we start by defining the terms. What is a trade war? A trade war is when you have a policy which reduces real trade to GDP, falling trade share of the economy. This is not going to do that. This is actually probably moving us away from the risk of a trade war.
Why?
Because what is happening here, President Trump has announced tariffs, which are a tax on consumers. But at the same time, he said, well, we're announcing tariffs which will minimise the effect on consumers. If you're announcing a consumer tax which minimises the effect on the consumer, this is an ineffective policy. So, yes, China will sell less to the United States. Other countries will sell more to the United States. China will sell more elsewhere. Other countries will sell less elsewhere. We're just shuffling global trade around here.
Right, but Paul, is this not saber rattling? And the concern with saber rattling is that, I try and shake you to get something out of you, and you don't exactly know where it ends.
Well, I think this is very ineffective saber rattling. I mean, this is trade policy for the Twitter era. I mean, this makes a fantastic soundbite. We're tough on China. We're imposing tariffs on $36 billion of products, and China's not actually going to be that much affected, nor, frankly, are soybean farmers in the United States. They're not going to sell to China, but they're going to sell to the people who were previously buying from Brazil, because China's now buying from Brazil.
Okay, so Paul, so this is a game. So it means that actually retaliation also from China is quite minimal because the Chinese understand that the impact on themselves is quite small. Yeah,
look at the list of products China's come up with. It's all global commodities. The one exception is the cars. There is an impact, because if you're not going to buy a Lincoln, you might decide to buy from somewhere else. But everything else, coal, oil, all of this stuff, these are global products in the global market. We're just moving stuff around. It's a confidence trick, basically. Find the lady. Okay,
is that why the markets are pretty cool about it?
Well, I think so. I was frankly surprised that soybean futures have reacted as much as they have. I mean, I think that you've got a certain amount of friction in the short term, that people have got to scramble to rearrange their supply chains a bit, and that can cause maybe 3 or 6 months worth of disruption. But I think markets are going to take this fairly placidly, because this is not actually a major economic impact.